Hey guys, Jason Schnitzer here with Remax Tiffany Real Estate. What I've got for you is my How's the Real Estate Market segment for week 28 of this 2022 real estate market. I do this video for you guys so that you can be most informed on what is oftentimes your most expensive asset, what's been going on here in Orange County, California for the last 7 days. As always, I like to start with statistics, which can kind of help us track trends, which gives us a little bit better insight into what that crystal ball might be saying for the next few months here in California. Inventory still on the rise. We're up almost to 4,000 homes for sale in Orange County. We started off with just 1,100 homes back in January 2022. Again, the trend is more new houses are coming on the market than are going pending. Interest rates, fortunately, are still playing ball, if you will. About a month ago, we saw rates jump up to almost 6%, but since then, they've kind of trickled back down. That was back when the Fed came out and they jumped up to 0.75% basis point increase instead of 0.5%. But since then, the big news this week is the Fed came out and started talking about real inflation numbers, and they're much higher than projected. We're at 9.1% inflation on the year, which is just mind-boggling to me. The highest it's ever been. I guess I should backtrack and say the highest it's ever been in this short amount of time. We're on par for some crazy potential inflation numbers. And what does that mean to you? Well, the Fed is in charge of two major things. One of them, try to help promote job growth. The other one, fight inflation. They've already come out multiple times this year and have said publicly that they're going to do whatever it takes to fight inflation. Well, their only mechanism for doing the job thing and fighting inflation is to lower or raise interest rates. At this point, they've already done the best that they could to lower rates. They went to 0. So we're now only have one other option, and that's to go the other direction. So again, they've come out and they've already said maybe 2 more times this year they're going to raise the rate 0.75% each time. And if you remember, when they did this last rate raise, we hadn't seen Fed raise their rates over 0.5% since the 1980s. So this is pretty historical with regards to the efforts to fight inflation, and kind of gives you an idea of just how bad it is currently. Not to be doom and gloom, but I like to be real here, and I like to give you guys the real information. A lot of people ask me, what the heck do I think is going to go on with the real estate market? They're making, almost $1 million decisions on purchasing a home, selling a home. So I take this very seriously. So the question is, what's going to happen in the next 6 months? And that question is going to be tightly tied to this inflation, because when the Fed raises rates, it doesn't directly affect the mortgage market, the loan that you get when you get a home loan, but it does indirectly affect that. And whenever rates go up, this market, as I've said multiple times, probably for the last 2 years, why did our market do so well? Why were house prices so high? We came out of what was probably the most affordable housing market ever. And that sounds crazy because house prices were so high. But the fact is interest rates were so low, your 30-year fixed payment was just about the same as, if not just a little bit more than what it would cost to rent. So the affordability factor was just neck and neck with rents. The higher your interest rate goes up, the farther apart that affordability factor becomes, and that directly affects supply and demand. So if you look back to 2021, we had so much demand because interest rates were so low and little supply. As you can see in this diagram here, if you get the statistics, we're seeing that flip-flop going from a seller's market to a buyer's market, and now we're seeing more supply and less demand, and that is almost 100% a reflection of interest rates. So, are we in a housing bubble? No. What we're in it is an affordability bubble, in my personal opinion. And we are going to see the market ebb and flow with what interest rates do. So if interest rates keep on going up, we're going to start seeing our housing market cool off even more. than it already has. So that's basically my prediction. It's not necessarily a prediction in regards to, do I know how high interest rates are going to be going into 2023? I certainly don't. I do feel like with the Fed raising rates and with these inflation numbers, they don't really have a choice but to go up. So I wouldn't be surprised if we saw interest rates go up in the next 6 months. So there's my prediction. And if you want to know what's actually going to happen, be sure to stay tuned every week. If you ever have questions about your real estate portfolio and portfolio planning and when you should make a move, etc., feel free to take advantage of our free real estate consulting, either by social media, reach out, email, phone call, etc. We'd love to help you guys out. We're dealing with a completely different real estate market than we ever have. So it's all the more important now to get with somebody that you trust and can help guide you along the process, whatever it is that you're trying to accomplish. So thanks for watching, you guys. Please stay tuned. Love to give you the most up-to-date advice, and I'll catch you next week. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason and I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and we'll get you those answers.